Imagine a pure-play uranium royalty company trading at $3.65 per share with one analyst projecting a $4.50 price target, representing 23% upside potential. But here's what makes this particularly compelling. They hold 2.38 million pounds of physical uranium worth approximately $180 million at current prices, over $230 million in total liquidity and inventories, zero mining operations risk, and a diversified portfolio of royalties across Canada, United States, Namibia, and Spain. This stock has dropped from highs but offers a unique way to play the uranium bull market without the operational risks of mining companies. They collect royalty payments when mines produce, they profit directly from rising uranium spot prices through their massive physical uranium holdings, and they've assembled a geographically diversified portfolio of uranium interests, including the McArthur River royalty, one of the world's highest-grade uranium mines. With H.C. Wainwright rating this a strong buy, uranium prices climbing above $77 per pound, and tech giants signing nuclear power deals for AI data centers, could this pure-play uranium royalty company deliver substantial returns while avoiding the execution risks that plague traditional miners? Before I reveal which uranium royalty company I'm analyzing, if you're new to smart investing, welcome. I specialize in discovering undervalued energy, commodity, and royalty stocks with proven business models, strong balance sheets, and genuine exposure to macro trends that mainstream investors overlook. I focus on companies positioned to benefit from nuclear energy expansion and uranium price appreciation. If you want more opportunities like this, royalty companies with asset-light models and commodity exposure, hit that like button and subscribe to Smart Investing. Now let me show you which uranium royalty play could capitalize on the nuclear renaissance without mining risks. The company I'm analyzing today is Uranium Royalty Corporation, trading on NASDAQ under ticker symbol UROY. Uranium Royalty is a pure-play uranium royalty company focused on gaining exposure to uranium prices through strategic investments in uranium interests. Founded in 2017 and headquartered in Vancouver, Canada, Uranium Royalty assembles a portfolio of royalties, streams, debt and equity investments in uranium companies, and holdings of physical uranium. Their business model avoids operational mining risks while capturing uranium price upside. The company owns and manages geographically diversified uranium interests across key mining jurisdictions including Canada's Athabasca Basin, the United States, Namibia's Erongo region, and Spain. Their royalty portfolio includes interests in projects operated by established producers like Cameco and Orano. Currently trading at $3.65, UROY represents a leveraged play on uranium prices with minimal operational risk. One analyst, H.C. Wainwright, maintains a strong buy rating with a $4.50 price target, representing 23% upside. The optimistic scenario: if uranium prices continue climbing toward $90 to $100 per pound, their physical uranium holdings appreciate significantly, royalty payments increase as mines ramp production, and nuclear energy adoption accelerates faster than expected, the stock could reach $6 to $7 over 12 to 18 months, representing 64% to 92% gains. The risk scenario: uranium prices decline below $70, mine production disappoints reducing royalty payments, or uranium market sentiment shifts negatively. The stock could decline to $2.50-3.00, representing 18 to 32% downside. October 28, 2024 announced acquisition of an existing royalty on the Cigar Lake uranium mine in Saskatchewan from ATHA Energy for approximately $15.9 million. Adding exposure to one of the world's highest-grade uranium operations. October 16, 2025 held their annual general meeting where all director nominees were elected and shareholders approved the company's stock option plan. August 1, 2025 announced Andy Marshall was appointed to the board of directors, bringing extensive uranium industry experience including previous roles with Energy Fuels and Uranium One. May 27, 2025 entered into an agreement to acquire a new royalty on exploration properties in the Athabasca Basin from ISO Energy, expanding their portfolio in this premier uranium district. The company maintains strong liquidity with over $230 million in combined cash and uranium inventories. Their 2.38 million pounds of physical U-3O8 provides direct exposure to spot price movements, currently valued around $180 million at approximately $77 per pound. Uranium royalty presents a compelling way to gain uranium exposure while avoiding operational mining risks that plague traditional producers. The physical uranium holdings provide leveraged upside. With 2.38 million pounds of U-3O8 acquired at favorable historical prices, every $10 increase in uranium spot prices adds approximately $23.8 million in inventory value to their balance sheet. At current $77 per pound prices, their uranium holdings alone are worth roughly $180 million. The royalty model generates cash flow without capital expenditure. As producing mines generate uranium royalty collects royalty payments without funding mine construction, dealing with labor issues, or managing environmental challenges. Their McArthur River royalty, Cigar Lake royalty, and Langer-Heinrich royalty provide exposure to world-class assets operated by Cameco and Orano. The diversified portfolio reduces single-asset risk. With interests across multiple jurisdictions and development stages, they're positioned to benefit as various projects advance through permitting, construction, and production phases. Their strategy of assembling royalties during uranium market downturns positions them to benefit disproportionately as prices rise. The nuclear energy renaissance creates tailwinds. With over 60 reactors under construction globally, tech giants Microsoft, Google, and Amazon signing nuclear-powered deals, and uranium supply deficits projected, the long-term fundamentals support sustained higher uranium prices. There you have it, Uranium Royalty Corp., trading at $3.65 with 23% upside to Analyst Target, strong buy rating, 2.38 million pounds of physical uranium worth $180 million, over $230 million in total liquidity, and diversified royalty portfolio including McArthur River and Cigar Lake, two of the world's highest-grade uranium mines. With zero operational mining risks and direct uranium price exposure, this could be a compelling way to play the uranium bull market. What's your take? Are royalty companies better uranium investments than traditional miners? Drop your thoughts below. If you found this valuable, hit that like button and subscribe to Smart Investing. Remember, this is educational content, not financial advice. Thanks for watching.